Is the optical technology sector flashing a major warning sign, or are we looking at an absolute steal at these current prices? Right now, the LightPath Technologies tokenized stock by Ondo, trading under the ticker LPTHON, is sitting flat at $13.42, showing 0% movement over the last 24 hours. But beneath this quiet surface, a massive battle is brewing. The charts are showing a clear falling trend, and several technical sell signals are locking in. Despite this, a dedicated group of buyers is stepping up, claiming the underlying asset is completely undervalued. Are they ahead of the curve, or are they completely ignoring a dangerous value trap? Let us break down exactly what LPTHON is and why it has suddenly caught the market's attention. This asset is a tokenized version of LightPath Technologies, a highly specialized company that designs and manufactures optical and infrared components. These components are critical for things like industrial lasers, thermal imaging, and autonomous vehicle sensors. By tokenizing this stock on the blockchain, Ondo Finance allows crypto investors to gain direct exposure to this legacy hardware business. It is in sharp focus right now because defense and automation tech are booming. Yet the stock itself has hit a massive rough patch. Before we get deep into these charts, do me a huge favor. Tap that like button, subscribe to the channel right now, and make sure to leave a comment down below with your personal price target for LPTHON. It really helps the channel grow. Looking closely at the technical analysis, the broader trend direction is definitely heavy and leaning to the downside. We have been watching a series of lower highs, and the short-term momentum belongs to the sellers. LPTHON is currently trying to establish a floor around this $13 range, which serves as a major psychological support level. If this level breaks, there is very little historical structure to stop it from sliding further. On the upside, heavy resistance is waiting near the $15 mark. The momentum indicators show that selling pressure has leveled off for today, explaining the flat 0% movement, but the overall market structure remains visibly weak. This short-term weakness is heavily reflected in recent ratings and signals. Several automated trading algorithms and analyst models have shifted toward hold or sell ratings for the immediate term. These negative signals are largely tied to supply chain pressures in the optical manufacturing sector and rising capital costs for hardware companies. Because of this, the short-term outlook looks highly defensive, with large volume traders hesitant to push major liquidity back into specialized manufacturing tokens until the broader macro picture clears up. This leads us to the ultimate question: is LPTHON actually undervalued, or is it a dangerous trap? The bull camp points out that LightPath's infrared tech is irreplaceable in modern defense and aerospace, making a $13 price tag an incredible long-term entry. The counter-argument, however, is that an asset in a falling trend can always go lower. Buying a token just because it looks cheap often means you are stepping directly in front of an institutional sell program, turning your entry into a classic retail trap. The downside risks here are very real, especially when dealing with tokenized equities on the blockchain. You face the standard operational risks of a hardware business combined with the round-the-clock volatility of the crypto markets. Retail traders frequently get caught in these setups because they see a flat day or a tiny bounce and assume the bottom is in. They buy in without realizing that institutional order blocks are still unwinding positions above them, leaving retail holding the bag during the next flush. Let us map out the explicit bull versus bear case for this asset. In the best case recovery scenario, LightPath secures a massive new defense contract, supply chains ease, and buyers aggressively push LPTHON back above $15 to reclaim the bullish trend. In the worst case continuation lower, macro liquidity dries up, the $13 support level fails completely, and cascading stop losses drag the token down toward the single digits. When we look at the ultimate outlook, the short-term view requires a massive amount of patience and caution. The bears currently hold structural control, and trying to guess the exact bottom is a highly dangerous game. Long-term, the global demand for advanced optical sensors and infrared imaging is only going to scale up, meaning the underlying business has solid structural legs. Just keep in mind, this video is strictly an educational overview of the token's market structure, and absolutely none of this is financial advice. So, we are left staring at a critical pivot point. Will $13.42 hold as the ultimate structural floor for this correction, or are we on the absolute verge of a much deeper drop?